Before we proceed, there are a few items that you want to know. You'll receive 1 CPE credit for viewing each live show. You will see letter codes in the form of a graphic on your screen. These codes will be repeated several times throughout the course. Be sure to write them down. If you have any questions at any point during the broadcast, you may submit them in the Questions tab. We have built in time at the end of the broadcast to address questions. Should you run into any technical difficulties during the webcast, click on the Help tab for the Help Desk phone number. Once the webcast is over, you'll want to click on the Certification tab to complete the program evaluation form and to enter the codes that were displayed during the webcast by scrolling down on the viewing page. Once you enter the codes, you'll receive your CPE certificate. IssuesWatch is being recorded and will be available on our website shortly after the broadcast.
Good afternoon. I'm Ellen McSherry, Chief Operating Officer at the NJSCPA. Welcome to IssuesWatch. Today joining me is Ralph Albert Thomas, the Society's Executive Director and CEO. And to our guest today, to my far right, is Brad Muniz. Brad is the partner in charge of accounting and auditing with Sobel & Company, LLC, and Brad is the current president of the NJSCPA. If you have any questions at any point during this hour, we ask that you submit them in the Questions tab so that we may adjust them throughout the broadcast. Today's IssuesWatch agenda will include a look at what's going on nationally with the economy, and we'll explore merger and acquisition activity. We'll also look at what's going on in the New Jersey realm, along with a discussion on selected hot topics. So let's get started. Since the third quarter of 2012, optimism from the U.S. economy has gone from 22% to 52%. This is reported by the AICPA's third quarter economic survey. This survey was taken amongst 1,100 of the high-ranking finance professionals across 9 areas. Across all sectors, companies are optimistic that they will grow revenue, profits, and headcount in the next 12 months. Another survey was conducted by the NJSCPA along with Capital Bank. And we conducted this survey at our NJSCPA convention and expo that we held in Atlantic City in the first part of June. This survey was developed to gauge the sentiment of the local New Jersey economy, taxation landscape, and accounting industry in the coming year. 74% of those surveyed believe the New Jersey economy is performing as well or better than the national economy. 65% expect their clients, as well as themselves, to pay more taxes in 2015 than they did in 2014. They also expect healthcare reform, rising interest rates, and limited access to credit to affect their businesses in the coming year. Despite these concerns, CPAs do expect their businesses to grow during the next year. So Ralph, are you seeing more pessimism regarding the New Jersey economy than the AICPA was looking at nationally?
Well, I think we are seeing a little more pessimism here in New Jersey in terms of the economy, and I think it was portrayed quite well in the Capital One, some of the results from the Capital One survey. I think CPAs here in New Jersey are concerned about the tax environment here and the fact that I really think this year they expected some additional legislation to come through to help improve the business climate here in New Jersey. I think when we look at what came out of the Capital One survey, the concern over higher taxes for clients, the concern over higher taxes for the firms themselves, and I really believe that there was some disappointment by CPAs that the administration, the legislature didn't come with some additional incentives to improve the business landscape here in New Jersey. And then when you look at the budget that was passed, while it was a balanced budget, the amount of discretionary spending was very, very small because the majority of the increase, I think somewhere between 90 and 95% of the increase in the state budget was geared to payments for the pension plan and state health care for state workers. So there wasn't a lot of money to improve infrastructure or to attract or even keep existing businesses or positioned them to want to expand here in New Jersey. So I think all of those factors, I think, resulted in maybe a little pullback in the CPAs here in New Jersey in terms of their outlook, in terms of the economy, particularly for the next year. We'll see what happens when we face next year's budget and see if there's a similar type of attitude.
Brad, from your point of view, being in public accounting, and you obviously had the opportunity to interact with many different clients, what are you seeing?
Overall, there's been a little bit more optimism that's come back because revenue's increasing, employees' raises are actually coming back, I'm seeing. Profit sharing contributions maybe haven't come back to where they've been, but there definitely see a better, a little bit of an increase in the business climate. That's overall. However, Ralph hit the nail right on the head. Locally, the businesses are very concerned. They're concerned about the business climate in New Jersey, either taxes or the incentives for business to be here. I have a client that purchased, their industrial client, they purchased real estate, various real estate holdings for their operations, and they're willing to forego that to be able to move to New York because New York is more enticing for them to come here. They approached New Jersey, and New Jersey is trying to come around to show something, but they had to approach New Jersey. New Jersey's not coming out just approaching not them, but others coming in.
Not being proactive.
Not being proactive at all. And then take it down to the next level. I know Ralph, you may speak on this later, was in Trenton this past week speaking on inheritance and state tax and death taxes. And it ties into a lot with nonprofits. We see the nonprofits are still hurting here. They haven't recovered. They don't see that light at the end of the tunnel yet. And if you tie it to some of the comments that Ralph had made very much on Mark about the money leaving the state, that can directly affect nonprofits.
And Brad's comments just made me think of two other things that I think are really important. Some of the things that happened this past year. We spent, the legislature spent a lot of time on minimum wage. Minimum wage, the minimum wage issue went to a constitutional ballot. So that obviously I think is on the minds of business owners. And also there's been a focus and a lot of conversation on paid sick leave and time off. These are two, I think, big issues that would cause most business owners to be somewhat pessimistic. Really? And also CPAs as well, and those who are owning firms. So I think those kinds of things, and the final thing I'll talk about, the millionaire's tax. There was a lot of discussion about reinstating the millionaire's tax or the surcharge on that group of individuals. And those kinds of things cause individuals to be very concerned about the landscape. Even though it didn't move through, there's been discussion of how it can be moved through, perhaps even moving that to a constitutional or ballot referendum, which could be quite challenging.
Scary.
It's scary. It's very scary.
That's good. I'm glad you brought up those points, that they're important. IssuesWatch Extra, which will air in mid-October, will delve deeper into the Capital One survey. So Ralph, I think it's fair to say that merger mania is alive and well throughout the country. Tell us what your thoughts are on the merger landscape today.
Well, I mean, in looking at some of the data that we see, and I think our viewers are looking at a bar chart now, you'll see the activity that's taken place since 2007 and all the way to 2014. Well, we see the dip down during the economic depression, but when you look at post 2010, 2011, you saw a little dip in 2012, but look at the tremendous increase in merger M&A activity in 2013 and 2014. I mean, from 2012 to 2013, we had a 31% increase in M&A activity, and this is just M&A activity, U.S. M&A activity. And then in 2014, it doubled to 61% increase from 2013. So I think what's happening, companies weathered the storm during the economic downturn. They did the necessary things to, I guess, manage the bottom line, reducing costs, and in many instances, reducing staff, taking some extraordinary measures in terms of profit sharing plans, all to keep the business going forward because they could not raise prices during that time. And so now I think they've done a good job with identifying all the efficiencies and the cost savings. And now, economic optimism is coming back, so revenues are improving. And these companies, I think, are sitting on, some nice cash reserves. And then I think the conversation at the leadership level in terms of what should be the strategic initiative in terms of growing the business is heightened. People are talking about what we need to do to improve revenue, what do we need to do in terms of identifying new opportunities out there. So I think you're seeing a lot of conversation about that. And it is becoming a strategic imperative on the minds of boards and senior leadership. Doesn't hurt that we have some strong stock market, strong stock market, and again, ample cash reserves. And then something that was lacking, during the economic downturn was the availability of financing. We really have a lucrative market, I think, in terms of financing. And I wouldn't say it's cheap, but it's very reasonable. But there are low interest rates are allowing people to go out and be really interested in doing deals. So I think when you look at the global perspective, it has really exploded on globally when you look at it. I think Thomson Reuters indicates that we had 1.75 trillion of M&A activity, which was up from 75%. So I think to say that the environment is right for M&A activity, I think is an understatement. I think it's really becoming attractive, and companies are getting very aggressive during this time period.
Brad, from your point of view, locally, what are you seeing? Are you seeing the same thing validate what Ralph has just said when you look at your clients?
Absolutely. People are considering it more now, putting their toe in the water for various reasons. They held out during the bad parts of the storm, which you saw on the slide when the M&A activity was down. But as Ralph said, the lending ability is definitely helping the situation.
Okay. Well, clearly.
Well, I think also some key drivers for why M&A activity, I think, is very strong is that you have firms who have previously been domiciled or located in a certain region, and now they're feeling comfortable to look to go to other regions, and they're looking at how can we maybe have some synergistic fits that will help and expand our revenue and our growth out in the marketplace. And I just think, these are some real interesting times.
And some of the reasons we see that they're looking to be acquired, succession. I do see the generational issues. One of the clients I have is in the third generation, and that's an anomaly. To make it to the second generation is in the minimal percents, and to go to the third generation, you're talking single percentage.
Is that right?
Right. Too much is tied up in equity. Is one of the issues, and the other reason that people do transactions at certain times is based on the timing of tax incentives. I wouldn't say it's the most tax incentive now, but there are other reasons. We always say to our clients, when you're considering a deal, don't let the tax tail wag the dog. It's important. You have to consider it as part of the process, but you have to make your decisions. Putting that towards the back.
I think another important aspect that we need to consider is clearly the M&A analysis and procedures, they need to be guided by consideration of ethical behavior and value judgments. So who better than the CPA to provide this level of objective and ethical consideration? CPAs, I think, will always remain an integral part of the M&A process. Ralph, how do you see the role of CPAs changing, if at all, in the M&A process going forward?
Well, I think it's going to change a lot, because I think one of the key things to having a successful merger is doing due diligence. And so I think CPAs, particularly CPAs in business and industry, will play an important role in being part of the due diligence process and looking at where there are synergistic fits, looking at where there are opportunities for cost savings or efficiencies with a merger. And so I think it's going to be CPAs in business and industry will play a critical part in that process. I think also when you're looking at all the cost structure of a merger, CPAs can play an important part in that regard. Again, looking at where there can be some downsizing when you merge two companies together, your hope is that you don't come out with double the size, that you come out with a lean, mean operating machine for that. So I think that's a real important facet to be considered. And I think Brad hit on, I think, some other key points too. Some merger M&A activity is being driven by the lack of succession plans in companies, particularly in the smaller businesses. When you think so, Brad, where there hasn't been necessarily the focus on who's going to be taking over. So
the succession is definitely part of the issue. You look at some of the, if within our practice even, you look at some of the firms, we've had 4 significant mergers that have happened recently within or are affecting our state. You have O'Connor Davies with the Fazium, and that's a firm that was looking for geographic expansion and additional expertise. You have the Cohn Resnick with the Eric Coley Group, Baker Tilly coming in with the Parente Beard, looking for geographic expansion, and then finally the big one, you have the KPMG, Rothstein Cass, they were looking for the expertise. Now those are 4 situations where they were either looking geographically or for expertise. What I'm seeing a lot of, especially with the smaller firms, is a succession issue. A quick one, a survey that just came out yesterday on the Harvard Business Review blog. There's a blog, so I give it a little bit of a discount there. But it is a career builder survey that said about 1/3, only 34% of people choose to be in a leadership position, and only 7% choose to be in the C-suite positions. Now, you look at the number of people that can be in the C-suite, you say maybe that's the right percent, but that's kind of staggering when you ask the question, how many are interested in being there, and only 7% want to be there. Of the total 34%, I said before, 40% were men and 29% women. And the reason that they gave for not wanting to go up there, the 2 largest reasons was, I'm content in my role, and the one we always fear that we're going to hear is, I'd have to work more hours. Okay, now I have to squelch one rumor or feeling that we all have about this, because I know everybody's sitting there right now, and the people out there saying, well, I know who said that they don't want to work more hours. Coincidentally, 60% of people 18 to 24 said that they want to be in leadership positions.
60?
60. 50%, 25 to 34, said they want to be in leadership positions. So this is the millennials that we keep saying they don't want it. They don't want the hours. They're the ones that want it more. Whereas you go to 35 to 44 years old, that comes down to 37%. And the Gen Xers are the ones that are the lower percents. So I don't know if we've been looking the wrong place maybe for our succession.
I don't know, but it all comes back to, talking about the CPA and their role. More and more business, I believe, are looking to the CPA, who also holds the CGMA credential, the Chartered Global Management Accountant. I think most people are aware of what that is. CGMAs are CPAs who demonstrate not only accounting knowledge, but also knowledge in the area of strategy, operations, human element, and performance, certainly all C-suite levels of capability. And interesting to note and important to note is until December 31st of this current year, 2014, AICPA voting members can obtain the CGMA designation by meeting the experience requirement only. Thereafter, CPAs will be required to take a strategic case study exam along with meeting the experience requirements. So if you're sitting out there in the audience and this is something you are looking to do to elevate your position within your company or within your firm, I suggest that you take action before December 31st. Get your CGMA designation and avoid taking that exam come January 1st.
Right. And I think the having the CGM designation positions a CPA in industry to a wealth of additional resources that can help that individual play a bigger role within their organization. Particularly as it relates, again, back to the discussion we've had on M&A, some of the kinds of things that the CGMA resources can provide will position individuals to be very instrumental in being part of the due diligence process. I know we've talked a lot about M&A activity, and particularly with respect to firms. And I just want to bring up a couple of points. In 2013, we had a tremendous amount of activity in the firm environment.
We did?
Yeah, we did. We had a lot of M&A transactions taking place. That's kind of slowed down a little bit in 2014, and the reason for the slowdown is the fact that finding the right firm to merge with. You know, we talked about some of the reasons why firms do merge or form alliances in some instances, or partnerships. It's because they're looking to have a succession plan. Some instances are looking to try to obtain skill sets that they don't have in their existing firm.
Mm-hmm.
And so we saw a lot of that. So I think while the activity has been robust in 2013, 2014 we're seeing a trending down a little bit in terms of activity, particularly amongst the group called the G400. Now people are saying, what are the G400? The G400 are the firms that rank from 101 to 500. You have the big international firms, the big four as we know it. Then there's the major firm group,
Mm-hmm.
which are the top 100 firms. The G400 are the firms that are 101 to 500. So that's the G400. And there are a couple of things that group in particular are seeing as big issues for them. One is fee pressure, and also what they call audit pressure. And you say audit pressure, well, that's the aspect of wanting firms to do more for less in terms of their audit fees. And then staff development and recruitment, which again plays back into why a lot of firms are merging, because they're looking to get the skill sets that are necessary. So I think it's important to note those facts, because you know, we're saying that globally M&A activity is very high, but we see a different kind of trend, if you will, on the accounting side, and it's all because I think in 2013 there were a lot of firms that were, I guess, ripe. And so I guess to those that are in the public practice, if you're looking to do something with your firm, position it to be a merger candidate out
Well,
there, I think.
that's a great segue, because we do have a question from the audience that says, what would you recommend to a sole or small practitioner who's looking to be acquired or merged? Brad, you want to try to take that one?
I'll say this when we talk a little bit more about B&I, business and industry mergers too. Are you ready to get out? Because that's the one thing I see. I've been in this position before. Excuse me, I've heard a lot of practitioners say this. First determine, are you ready to get out? The second thing is probably the more difficult to do, is to try and find somebody. Mm-hmm. Believe it or not, one of the areas I recommend people go to meet the others that are interested in these type of mergers are chapter meetings, because you have people that are, it's usually a smaller firm orientation, and people like mindset, they talk about this more. Or you could talk to a broker. That may cost money, but you first have to determine, are you ready to get out? The second thing that you have to figure out is what your culture is, and communicate that to the person that you're talking to. The most reasons I see mergers and demergers are cultural issues.
Yeah.
The aging base, we have an aging base here, we know that, but a lot of them are not ready to retire yet. And then I go back to my comment earlier about the age and who wants to be a leader. The millennials are out there and they may want to be able to take over the practice. The problem is they want it now. Mm-hmm. And the aging base isn't ready to give it up yet. So to go back now to try and make sure I answer the question. If I don't answer their question, please feel free to reach out to me. I'll talk to you directly. What you should try and do is find the area where there are the people that are interested in this, either through a broker or, again, the chapter meetings. They have probably the most amount of people interested in this, and then start talking with different people.
And if I could just add, one of the things is I would suggest to someone who's interested in positioning himself is to go to the Society's website. I mean, we have resources out there that can put you in touch with people who are in the broker business, if you will. But more importantly, I think there's some resources out there to talk about some of the things that, Brad, that you talked about, is deciding whether you're ready. What do you need to do? How you should approach this. So in addition to the other things, I think push that button and it goes to the NJCPA website. And I think you'll be pretty surprised with some of the helpful tools that are out there.
You know, we talked about the expanding role of the CPA in mergers and acquisition. Brad, I'd like, from your point of view, what role really should the CPA play in making technology purchasing decisions for clients?
The CPA could be very essential to helping the companies, especially their clients, with their technology issues. We're usually the ones that are in there, at least on the financial end, understanding the financial aspect. Many of the CPAs, and especially when we have this during our audits, we have to understand the impacts of the operational end, how it affects the financial end, and we see how things tie together. So you're very involved in it. What you do want to make sure is that your CPA has the technology capabilities. While I'm very involved in audits and I have to have an understanding of the computer system, I would not be the one that you'd want to talk to advise on a computer system, unless you want to know how Excel and Word is. But I'm the person who will help you find somebody. If not in-house at our own firm, I would be able to help you find somebody. And if I can't do the work myself, I or other CPAs would be willing to help quarterback the situation. What I've seen a lot of times is the company will try and handle this on their own. And the company is best at selling their widgets, providing the service they provide, and distracting them from that to handle IT or technology issues is a real detriment to the organization of their operations, or to getting this in, making this really happen.
So your advice is to bring in someone with the expertise.
Either somebody with the expertise or somebody that's willing to be your project manager. And if the CPA doesn't have the expertise, let them be the project manager, because they have that ability to coordinate it and understand what's needed.
Good advice. Did you have something you wanted to add, Brad?
Well, I just,
No,
I know
disagree.
no, I don't disagree. No, I was thinking about a different thought that, and it's back to the M&A activity. I know we've talked a little bit about that, but we have a large group on today's cast that are from business and industry. And one of the things that I think they should be very recognized is all the large M&A activity that's out there. We've heard about the Comcast and Time Warner cable merger discussion, AT&T buying DirecTV, Medtronic buying Covidien, and one that was really interesting was Burger King and Tim Hortons.
Right.
Who would have thought of that? But the play behind that was a tax inversion strategy.
I was just going to say.
Yeah. I mean, looking how to lower taxes by going offshore or north of our borders. And then we can't help but talk about Facebook and its acquisition of WhatsApp, for $19 billion. That was one of the smaller ones out there with all that. But I think, those mergers really set the tone and the landscape for, I think, what we're going to see going forward, where companies are looking to, grow revenue, look at revenue opportunities, look at also cost savings, look at trying to grab market share. I thought the Time Warner merger was very interesting in how they approached it with some of the ads that they got. One that struck me very, very, very much was "Making Life Online Better." Was one of the taglines, and I just thought that was that. And then another tagline was "Together is Better." So I think that's what we're seeing out there, why merger activity is so strong.
Mm-hmm. Okay, before we switch, I have another question here. Assuming everything else in place, does technology being used by an accounting firm affect its readiness for merger acquisition? In other words, does there need to be parity in the extent of paperless operations or the types of accounting, tax, and firm management software? Ooh.
That's a Brad
Ooh is right.
I got is. After that, I lost you. You had me at hello. I'm assuming this is a firm question, not a B&I, business and industry
Sounds
question.
like a firm question.
Right, and they're talking, I'm sorry, can you just read that one more time?
Assuming everything else is in place, does the technology being used by an accounting firm affect its readiness for merger and acquisition? In
Yes.
other words, does there need to be parity in the extent of paperless operations or the types of accounting, tax, and firm management software? I think when you're looking for two firms to
Right.
merge.
Okay, no, I got it.
Yeah.
It's always beneficial when you take firm A and firm B and this goes with company A and company B, which usually doesn't happen with business and industry people. So I'm going to stick with firms comments for right now. When you have firm, very often you'll see similar tax softwares. There's not a lot of them out there. You see similar tax softwares. You'll see similar time and billing system softwares. And if not, a lot of them can talk to one another. I know you could take certain, and I'm not promoting any software, you could take certain Pro Systems files and export it into Lacert. So things can be done. There are synergies between the softwares that help the merger process. It's not seamless. There's still work that has to be done. And again, don't let that, if the marriage works in other areas, don't let software and IT hold it up. But absolutely, whoever asked that question, great question. Make sure you talk about that before you go in, because you want to make sure the amount of work that you're going to have to do and who's going to do it, who's going to merge these files. Just transferring data from one location to the other is going to take time, let alone if you have to convert the data from one software to the other. It's definitely a concern. We had somebody who just joined a smaller firm, and coincidentally, lucky for him, the smaller firm was using the same tax software. So all he had to do was bring his files over.
Okay, thanks, Brad. That was helpful. We had one other question. That question on the CGMA designation. Question was, did that person need to be a member of the AICPA? Yes, you have to be a voting member of the AICPA in order to be a CGMA. So, gentlemen, I thank you. That was great conversation on M&A and what's happening right now in the environment. So we're going to change topics now. Switch over, Ralph. Let's look at what's happening locally in New Jersey on the legislative arena.
Sure. Well, Brad teed up a little bit talking about, we were in Trenton this past Monday on a big issue that has been on everybody's minds, and it's now on the lips of lawmakers about the inheritance or estate and inheritance tax here in New Jersey. New Jersey is one of two states that has both an estate and inheritance tax. And the other state is Maryland, and they're in the process of changing to conform to the current IRS or federal estate and inheritance tax exemptions. And so what this does is position New Jersey to not be competitive with the other states and jurisdictions in this region, and not competitive with the rest of the country. And more importantly, it positions our members to advise their clients to leave New Jersey.
Sure.
Because of the onerous implications or ramifications of the estate and inheritance tax here. So a coalition is being formed, which we're probably going to, we will be part of, to really work on this issue. There are a number of bills that have been introduced, but I think the key thing that has really changed this year is the conversation is emanating from legislators. During the recent budget discussions, I know the state treasurer indicated that he was getting questioned about the estate and inheritance tax and what could be done, what should be done. So I think that that's important. And so there are probably more than half a dozen bills out there that approach it from all different angles of total elimination of the estate and inheritance to raising the exemption level, because currently the New Jersey exemption level, and I hope I get this right because I'm not a tax person, is $675 here in New Jersey, whereas on the federal level, and I'm looking to Brad, is I believe $5 million?
$5 million.
$5 million. So huge difference.
I'm sure we'll be corrected by a tax person. Watch your right.
somebody will weigh in and say, "Boy, you guys need to, stay."
I said I'm audited.
But so I think we'll see a lot of activity, a lot of the business groups coming together, and having that as one of the agenda items that they will push forward in unison, and that's what we're hoping to do, because it will, not only does it affect individuals leaving, but these individuals have small businesses that they can transplant. So you have these unintended consequences of not only not getting the estate or inheritance tax, but losing out on the business tax opportunity and also the gross income tax.
Right.
And so it makes it tough for New Jersey to be real competitive in that regard.
I hadn't thought about that until we saw a presentation by the state treasurer. You think estate tax, it's all you think, that one-time big bang. And he said at a meeting that we were at, you lose the annuity.
Yeah.
And that's the concern. He said, I'm really not worried about the estate tax. I'm worried about the annuity that we're going to lose. Because we're talking about individuals with, passive income that they're being taxed on, and that goes away for a number of years.
And the other thing that's sort of, one of those intangibles that's hard to quantify is that when individuals leave, these are individuals who usually are very philanthropic in their nature. They sit on nonprofit boards and the skill sets that they bring to the table. And do you want all of that leaving the state of New Jersey and the party? Because people will they will be philanthropic where they live generally.
Right.
So if they leave New Jersey, that means they're not going to be making charitable contributions to organizations in New Jersey. So a huge, huge thing. So that's going to be a big initiative in the upcoming year in 2014, 2015 to see if we can really get the legislature to address that. The other thing that we had that took place was what we referred to for CPAs as the CPA Death Penalty, which was part of a piece of legislation that also addresses reciprocity. Effective August 1st, any individuals who have had their license lapse after 5 years are not mandated to retest here in New Jersey. This individual licensing board can talk about that. And we did a little video clip on that, and so I think we're going to roll that video clip on that particular item. Hi, I'm Ralph Albert Thomas, CEO and Executive Director of the New Jersey Society of CPAs, and welcome to the latest edition of IssuesWatch Update. Today, we're going to talk about the new legislation, which we commonly refer to as the Reciprocity and CPA Death Penalty legislation. This legislation became effective on August the 1st and is commonly referred to as Public Law 2013 C.182. The legislation eliminates the need for those individuals who have let their license lapse after 5 years to have to be required to take the CPA exam again. Needless to say, this was an onerous regulation which we were working for a long time to try to overturn. However, it's a regulation that pertains to all professional licensing boards. In addition, the legislation also attempts to streamline the reciprocity process, which in the past has also been a long, arduous process. However, given that the law has taken effect August 1st, the underlying application forms and processes to streamline the reciprocal process and the elimination of the requirement to retake the CPA exam have not been finalized by the New Jersey Attorney General's Office and the Division of Consumer Affairs. Consequently, individual CPAs who are looking to take advantage of the new changes in the law should contact the State Board of Accountancy to find out what is required of them in the interim while the new forms and new processes are being developed. It has taken a while because this new law not only affects CPAs, but it affects all professional licensing boards and those who have an examination with respect to the lapsing of a license. While the law eliminates the mandatory requirement to retake the CPA exam if one's license lapsed more than 5 years, the board has the discretion to determine what a licensee or an individual who is looking to reactivate their license has to do. So that may include taking some form of a test, or it could include other things such as taking additional CPE or appearing before the board so that they could determine whether an individual has maintained competency during the period in which their license has been lapsed. Be mindful of that when you contact the State Board of Accountancy to ask about what is required in terms of, reciprocating or reinstating your licenses. For reciprocity purposes, you only need to have a valid license from another jurisdiction and then ask the board what other requirements are necessary to reciprocate that license. Thank you again for coming to this edition of IssuesWatch Update. So hopefully that video was helpful. Just real quickly, a couple other things that we're following. Last week, the governor signed a bill that we were supporting to change the composition of the State Board of Accountancy to make it easier for the Appointments Council to identify the right kinds of skill sets for board members. And then the other thing, I would be remiss if I didn't mention that this is the end of the reporting period. We're coming down the home stretch, and we're less than 4 months out to December 31st. And get those 120 hours in, and if you can't get it in, don't ask for an active license. And stay tuned for our communications about opportunities to take courses and to complete your requirements. And again, every individual who asks for an active license must complete a New Jersey law and ethics course during the triennial reporting period. So that's it on what we're following. I'm sure there'll be more things that will come up as the year progresses.
Thanks, Ralph. Brad, let's turn to the profession hot topics now. Let's tell us what you're seeing.
Yeah, there's a couple of hot topics actually the AICPA has requested comment on. The first one is a discussion paper that they put out on audit quality. The AICPA is concerned about the audit quality as they always are and should be. And they've put out a discussion paper that's addressing 4 pillars that they're focusing on, including competence and the professional standards. And what you're going to see if you look over the paper where the comments are due November 7th is they're looking at it at least in stages. They're not throwing everything out there and trying to fix everything at once. So they're focusing on the near term, which items include strengthening the peer review process, which I'll talk about in a little bit, revisiting the professional standards again, creating additional guidance and tools, which is always very helpful to the practitioners, and then reinforcing professional ethics. And that's in the near term. And then they're going to look for the long term, which is transformation for practice monitoring. That is a significant issue, and when I get to peer review, you'll understand more about the practice monitoring of how you're overseeing the firm and ensuring quality within the firm. That is long term because then they're starting to delve into the firms and see how they're going to help too. That's the enhancing audit quality. The next one is the CPA exam. There's a lot of concerns about the CPA exam, about the number of people taking it, which is their concern. But on the other side, the converse is that NASBA is concerned because the passing rate is up. So I hope that these two start talking to one another, because if they start making it harder, that's less people that are going to be taking it, and then the passing rate will go up again. So it's just going to be a cat and mouse, chasing its tail. So I hope they address that. But there is an invitation out there invitation for comment by the AICPA about the CPA exam. They're looking for feedback. As I said, they're concerned about the number of people taking it and their thoughts on the cost structure. I don't know if they'll be addressing that, but at the meeting I was at yesterday, that was one of the comments that came up from younger people, is the cost structure. That's what's affecting public industry as it relates to tax. There's 2 topics that are, or there's one topic that's significant right now, and that's the cash method of accounting. There was a move, of course, for budgetary issues at the IRS level, with this federal level, to eliminate the cash method of accounting. I won't go into the details. AICPA had a very, very big push on it to try and push for legislators to fight against it, to sign on letters saying that they're not in favor of eliminating the cash method of accounting. I think right now the number is approximately 233 members of the House have signed the letter. Unfortunately for us, though, only 3 from New Jersey have. So we've got to push our legislators a little bit much, and it's not party line issue. So Bill Pasquarello has been very big in supporting us. So it's either way. We need to get New Jersey moving a little bit more on that. Now I know I went away from the public before, but the one area I did want to close up on with this is the peer review. Okay. There are significant issues affecting the peer review process. The Department of Labor found that certain people who had peer reviews didn't have their employee benefit plan audits subject to peer review. and they were criticized in the peer review process. So the ICPA is coming back and mandating re-reviews for some of these firms where these issues were found. It's not going to end there. The GAO or governmental audits may be subject to this also. So if you are having a peer review done, or if you're at an organization that has these type of situations, make sure your peer reviewer or your audit firm has their peer review done in accordance with the proper standards. If you're unaware of it, the AICPA has information that's going to be out on it. We'll have a video later on talking about this a little bit more of what the ramifications are.
So I think we're going to go to the video. We have Jim Hardenberg, who's our CLO, has done a video on peer review for us.
Hi, my name is Jim Hardenberg, and I am the Chief Learning Officer for the State CPA Society. I'm here today to give you a brief peer review update. Earlier this year, the Department of Labor and the AICPA embarked on a joint initiative to ensure that CPA firms have correctly included an ERISA audit in their most recent peer review. Unfortunately, this initiative identified numerous firms that had omitted an ERISA engagement from their peer review. Accordingly, the AICPA revised existing guidance for firms and reviewers and provided training for reviewers and administering entities. And they note 3 risk mitigation steps for firms when planning your peer review. First, make sure you identify all applicable levels of service that you perform. Second, include all engagements that you have performed during that peer review year. And third, a firm representative is going to sign a firm representation letter indicating that the firm has provided a full population of engagements to their reviewer. A few examples of how an incomplete population could affect your firm's peer review if you don't comply and fulfill all of the requirements. First, an omission of an engagement could lead to a peer review that is not performed in accordance with the standards. If an omission is deemed a material departure, your acceptance letter for that peer review will be recalled. When this happens, your administering entity, the CPA Society being yours, we will need to notify applicable state boards of accountancy of the change in acceptance date on your most recent peer review. Again, when you have a recall, your firm will be required to have a replacement review performed timely. And for reviews commenced after April 1st of 2014, your firm will be subject to a hearing panel to determine whether your firm's enrollment in the program will be terminated. Failure to have a replacement review submitted timely will be considered a matter of non-cooperation, which will result in your firm's enrollment in the program being dropped or terminated. The AICPA's peer review team, as well as the State CPA Society, is committed to helping practitioners and firms comply with these requirements. The AICPA peer review hotline with questions is 919-402-4502, option 3, or you can email prptechnical@aicpa.org. Or as always, you can call us here at the State CPA Society. Thank you.
Well, we've hoped that you found this video informative. Peer review is undergoing so many different changes right now, and I'd like to thank our CLO, Jim Hardenberg, for his guest appearance on IssuesWatch today. We do have another question, and we thank you, audience, for providing us with these questions today. In your opinion, I'm going to give this one to Brad. How likely is it that the state will increase the estate tax exemption in 2015?
I'm going to say it's fiscal 15 through 16. I still don't think it's likely. Let's just look at our most recent history of this current budget process that we went through and the shortfall and the pension issue that Chris Christie faced. That's going to come back next year, and I don't think that they're going to have the ability to not make the pension payments. So assuming everything else being equal, you're going to have deficit, and the last thing that they're going to want to do is reduce another tax area. But Ralph being in Trenton, and other people that are standing behind the center, or I believe is one of our significant sponsors, that have been talking about this, have finally brought this to light. I don't think in the next budget session, 15 through 16, I don't think it's going to happen, because you have to we have approximately 30 voting districts, so you need at least half those senators, and which would be 30, and you have 70 then assembly. You need at least half of them to vote for this. It's going to be tough, so I see it probably 2 or 3 years down the road.
Okay, great.
But I will say, one of the things that I think is important is that grassroots involvement. If the citizenry of New Jersey are heard from, then it's going to drive lawmakers to do something, I think. So I think we may have some opportunity if the citizenry really rises when the various organizations reach out to them, and I'm hoping our members will do that as well.
Good.
Great point.
You know, another hot topic, Ralph, is the AICPA's lawsuit against the IRS. Do you have an update on that?
Just a quick update. You know, the suit was filed in July by AICPA, and just recently IRS has filed a motion to dismiss the suit. Now, and the likelihood, well, it was not unexpected that they would respond in that regard. I think we won't hear anything probably until first quarter of 2015 on this, to be quite honest, in terms of a response. But I think when the profession is hopeful, AICPA is hopeful that their motion to dismiss will not be approved, and they will then move for summary judgment is the latest word out on the street about the suit.
Okay, thank you. I have one more question, and that is, I think I'm going to have each one of you weigh in on this one.
Point, counterpoint.
Oh.
What is the profession doing to encourage our people to take the CPA exam? Maybe from your firm point of view, and then Ralph, what you're seeing as you attend meetings throughout the country.
Sure, I mean, that's an extremely hot topic and something that I'm very passionate about. Over the past few years, up in, let's say, before these prior 2 years, people would come in and we'd encourage them. You know, you really should be studying, you really should be studying. And I found, especially in public accounting, usually we start the people, especially brand new hires, in September. Some firms October, some firms November. And when they come in, they're not very busy too. So we started sending out to our new hires, in the correspondence we sent to them, we're looking forward to you coming. Some of our messages now are, we anticipate that you will have signed up for the exam, that you're studying already, that you've taken parts before you come in. I know some firms are actually taking a lot stronger positions on that, as saying you expect that you have this, and if you don't, it's going to look on you. As I said, some of the people, when they come in, they're unassigned. And they'll, of course, they're very good at surfing the web, and we said after a while, if you're unassigned, you should be studying at least. If not reading professional journals and bettering yourself at our audit or tax structure, then you should be studying if you're at your desk. So we're giving them 8 hours a day to study. We expect that. So we're starting to set the bar a little bit higher. We had a person who just joined with us. She already had 3 parts passed. How could you not like that?
Nice.
That's because that's how a lot of public firms have it. I think private probably has a little bit more difficult, because when they finish, they graduate in May. They're starting in June sometimes. So they're going to have a little bit more difficult in business and industry trying to set that expectation. I'd like to hear how some of the larger companies, Johnson & Johnson, do it. And then you go to the smaller companies. Then you have the people that you have to be dedicated to it. We try and have the examples for the people saying you don't want to be in this situation.
Exactly.
Or the people that have success will say, here's how to do it. I'm telling you, get it done. So communication.
Well, from my side, I think, and also speaking on a national basis, I think the Institute is attempting to understand what are the barriers out there. What's preventing today's accounting graduates from taking the exam. We've heard anecdotally a couple things: the financial impacts, the cost of the exam, not enough time to study. I think they're going to try to peel back the onion and really get at the crux of why today's accounting graduates aren't taking the exam. putting my society hat on, the things that we're doing here in New Jersey, along with a lot of our other counterparts, is we're encouraging individuals to take the exam right away, to register right away, get the exam out of the way. I know today's graduates come out and the first thing they want to do is, studied for 4 years, 5 years, or if you're in the 6-year program, 6 years, I got to take a break, I need to go, and they go away, take a nice vacation, kind of become a beach bum or whatever. But it's important that they take that one last step and do that. It is tough to, once you start working, to devote the time to the studying that's necessary to pass the exam. And so we're encouraging students on all of our programs to take the exam right away. And we're also communicating to them the importance of having the credential and what it can buy you in the marketplace. And so I think right now those are the kinds of things that are taking place out there. I'm sure there'll be some other things that we'll have to do.
Great. Well, gentlemen, I thank you. And I thank you, ladies and gentlemen, for tuning in. That's it for today's Issues Watch. Have a great weekend.